I found something astonishing. Among these top 10 funds, 6 are from Quant Mutual Fund. In the 10-year data, 4 funds have come from Quant Mutual Fund in the top 10. Hello viewers, Namaste. Just I was going through the SIP data for last 5 years and last 10 years. I found something astonishing. Just wanted to share that with you. Last 5-year SIP returns of the top 10 funds. So among these top 10 funds, 6 are from Quant Mutual Fund. You can see that Quant Small Cap, Quant Infrastructure Fund, Quant Tax Plan, Quant Active Fund, Quant Flexi Cap Fund, Quant Mid Cap Fund. They figure in the top 10. 6 funds from single fund house. Okay, 5-year might be an anomaly. Just I wanted to check the 10-year data. In the 10-year data, 4 funds have come from Quant Mutual Fund in the top 10. They are Quant Tax Plan, Quant Active Fund, Quant Flexi Cap Fund, Quant Infrastructure Fund. So just I thought of sharing this data with you. Earlier we have done an interview with Mr. Sandeep Tandon, who is heading Quant Mutual Fund. He's an amazing guy. Quant Mutual Fund was renamed by taking over earlier erstwhile Escorts Mutual Fund. So it is a small fund house managing around 10-15,000 crores approximately. It is a small fund house. But in the last couple of years, their assets under management has grown purely because of its performance. Even in the recent past, they came out with a large cap NFO. That is one. The number 2 item is the top 10 schemes in the last 10 years. SIP schemes, they have generated enormous wealth. As you can see that the topmost scheme is SBI Small Cap Fund. If one had invested 10,000 rupees per month in the last 10 years, he might have invested 12 lakh rupees. That 12 lakh has grown to 38 lakh 2,858 as on 29/9/22. So the profit earned is 26 lakhs 2,858. Number 2 is Nippon India Small Cap Scheme. Its current value is 37 lakh 39,274, 23.69% per annum return, fantastic return. Number 3 in line is Quant Tax Plan. 10,000 rupees per month investment in the last 10 years has yielded 36 lakh 98,706, which is a profit of 24 lakh 98,706, and so on. I have given. One more fact is, we have taken in the last 10 years 266 funds for our analysis. We have taken everything, all open-ended schemes. If they are, whether they are active fund, passive fund, overseas fund, fund of fund, ETF, everything is there. I have given the whole, data in the description box. You can click the link and see it for yourself. So in the last 10 years, there were around 266 funds which match our criteria. I have taken only regular funds. So out of these 266 funds, 248 funds have given 8% or more return. Why 8%? Why 8%? Because generally we look for at least I should get 8% in a fixed deposit, a better yielding fixed deposit, or a bond, or a recurring deposit. So I have taken that as a ballpark figure, a benchmark number. So 8% and above, 248 funds out of 266 funds, which is 93.23%. 93.23% of the funds have given more than 8% return. Similarly, I want more for the risk taken. At least I want 12%. Okay, 12% and more. 186 funds out of 266 funds have given 12% and more returns, which is a wonderful return in any standard. From a percentage perspective, 69.92% of the funds have delivered 12% or more in the last 10 years if you had invested through SIP. In the 5-year data, in our analysis, we have taken 351 funds. Out of that, 320 funds have given 8% or more returns, SIP returns, which is 91% of the funds have given 8% or more return, SIP return. Similarly, 12% and more returns were given by 260 funds out of these 351 funds, which is 74%. So there is 74% probability that you would have gotten 12% and more. Also, I want to share the average return. I have taken all the funds. Out of that, if you see, the average return is 13.57%. A few of the funds, yes, they have given some negative return. Mainly they are, emerging market funds, global funds or commodity funds. Some of them have given world gold commodity fund, etc. have given negative returns, SIP returns in the last 10 years or 5 years. Most of us might have not invested in those funds because they are very specific funds, and their AUM is also generally lower. So the last 5-year average SIP return has been 13.57%. 6 lakh investment over a period of 5 years might have become 7,91,058 rupees, approximately 1,91,000 of profit, which is very good in any standards, because in the last 5 years fixed deposits have given much lower return, we all know. Similarly, if we get into the 10-year average, 10-year average has been 13.05%. An investment of 12 lakh over the last 10-year period might have become 22,55,063 rupees, a profit of 10,55,063 rupees. So all these show that if you invest properly and regularly in a disciplined manner in equity mutual funds, you will get much better return than anything else out there with comparatively lower risk. So all these show that you can get better returns over a period of time in equity mutual funds. Thank you very much. See you in another video.